All right, folks. We're going to go ahead and get started. It's 2:02 Eastern Time. Thanks so much for joining our call today. My name is Phil Burkaw. I manage the City Innovation Ecosystems Program at the National League of Cities. Today, we are focused on something that is extremely relevant, Community Development Financial Institutions, or CDFIs. As many of you are well aware, CDFIs play a crucial role in providing affordable and flexible capital to disadvantaged communities, and are also playing an important role in the most recent rollout of the Paycheck Protection Program. To help us better understand how city leaders can play a role in supporting CDFIs and also vice versa, we're very lucky to be joined today by Adina Abramowitz, the managing partner of CDFI Friendly America, Gary Cunningham, the CEO of Prosperity Now, and John Hamilton, the mayor of Bloomington, Indiana. Before I pass it over to our speakers, I want to highlight the crucial role that some cities are playing in ensuring that PPP funds get into the hands of Black and Brown business owners who were disproportionately left behind over the summer. We've written an article with Della Clark at the Enterprise Center in the city of Philadelphia, sharing some concrete actions that cities can take to deliver a more equitable outcome this time around. I will go ahead and post the link to this article in the chat box. We'll also be discussing PPP tomorrow in a webinar with Bruce Katz at 2 p.m., which you can still register for. And I will go ahead and paste the link to the registration page also in the chat box. So with that, I will pass it over to Adina.
You're muted, Adina.
Okay, let's start over. Now you can hear me, I hope. So I'm going to spend just a moment or two talking about what is a CDFI and how can it help your city. And then I want to tell you about a new way of bringing CDFIs to your city called CDFI Friendly America. And then I'll pass it off to Mayor John Hamilton, who will tell us how that's worked for him in his city of Bloomington, Indiana. And then to Gary Cunningham, who's going to tell us about efforts to bring more CDFI activity to cities that are majority Black and Brown. And then finally, we're going to tell you a few things about next steps if you're interested in becoming a CDFI friendly city. So what are CDFIs and how can they help your city? So CDFIs do lending of all sorts just outside the margins of what banks can do. So we're not, generally speaking, many CDFIs are not regulated traditionally. And so they can create their own loan policies and their own, based on their own experience of who actually can repay, have a different idea of what risk is and manage risk in a somewhat different way. They also provide support to both applicants and then to borrowers, so that also increases the chance they'll get repaid and also the chance that the borrower will be successful. So there's over 1,100 CDFIs in the country, and they exist in every state, in DC, in Puerto Rico, and Guam, but they are not evenly distributed geographically. So you could be in Chicago, where there's a CDFI on every corner, or you could even be in the tiny little city of Berea, Kentucky, where there are actually 3 CDFIs, or you could be in other places where there are no CDFIs, or maybe there's one that does only one kind of lending, like maybe they only do micro lending and you're looking for affordable housing lending, or maybe they only do consumer lending and you need someone who can do a commercial real estate deal. So the bottom line is that in your city, there may or may not be a lot of CDFI activity, and it's not a completely rational distribution. During the pandemic and in recent disasters or economic downturns, CDFIs have turned themselves into the role of economic first responders and have been very active in helping businesses. And in fact, you see just now that they are, there's a round of PPP lending that they're doing specifically, that they were given opportunities to get out there first and to help businesses that are either in disadvantaged places or don't have the banking relationships, or maybe they just don't have that experience of how to make those applications. And CDFIs all over the country are originating PPP loans or partnering with other CDFIs that are originating PPP loans. So we know that local budgets have been hit hard So CDFIs, one thing that CDFIs definitely are is a way to bring private sector capital to your community. So maybe you don't have any more TIF money, or maybe you weren't successful at getting a low-income housing tax credit, or maybe there's some other kind of funding that you depend on that's running out. If a deal can use debt instead of grants, then CDFIs may be able to help. So what is CDFI friendly? What's this idea? So like I said, there are over 1,100 CDFIs in the country, but they're not evenly distributed. So CDFI friendly is a new way to bring CDFIs to your city. Instead of having to build it from scratch, or instead of trying to convince a CDFI to open an office in your city, CDFI friendly is a new way to bring CDFIs to your city by organizing and then writing a business plan and then standing up a small nonprofit organization that has a staff person and an enhancement fund. And the staff person's main job is to make introductions between potential borrowers and CDFIs in the region. And CDFIs are looking for new deals. CDFIs are getting more and more capital, and they need new places to put their money. They want new places to put their money, but it's very hard to go to a brand new city where you don't know anybody. So CDFI friendly is a way to like raise your hand and say, I'm ready. I can make those introductions for you to the potential borrowers that are for real. So just to give you an example of how small communities don't necessarily get their share of CDFI fund money, we at CDFI Friendly America look at a data point, which is CDFI lending per capita. So per person from 2005 to 2018, that's the latest data that we have. So for the entire country, the average is $182 per person. So over those 15 years, each person, if you divide all the money that was lent by CDFIs by the population, it's 182. But if you look, we've done a lot of work in Indiana. If you look at Indiana, average is $37, not 182, but 37. And if you look at the city of Goshen, where we're working now, it's only $8. So the money is not evenly distributed by any stretch. And so we have that data for every city in the country, and later on I'm going to tell you how you can get it. So we want to encourage you to think about bringing more CDFI money into your community as a part of your community and economic development strategy. So now I'm going to turn it over to John Hamilton, the mayor of Bloomington, Indiana, and the former president of City First Enterprises, which is a CDFI in Washington, D.C., who's going to tell you about how CDFI Friendly helped and is helping in his city. Thank you, Mayor.
Thank you, Adina. Can you hear me all right? Good, okay. Really nice to be with you all. Thanks National League of Cities for hosting this event. Great to be with fellow municipal people from around the country where the rubber meets the road. Adina, thanks for that setup. And Gary, I just want to mention to you, I started a couple CDFIs and your organization actually was one of our partners in doing that 20 years ago. So I don't know that we've crossed paths, but I sure have with your organization. It's really nice to be on a panel with you too. So I just really want to relatively briefly expand on what Adina said and speak to my fellow municipal folks from around the country. CDFIs, I'm a mayor of Bloomington, Indiana. We're a city of 85,000, a county of 150,000. We have a major research university. We have a typical mix of industry and affordable housing issues and daycare needs and healthcare needs and all kinds of things that most cities, communities in the country do. As a mayor, I'm always trying to figure out how do we advance our community. And CDFIs, which I spent some earlier time in my career founding and working in CDFIs, are incredibly important to cities. They can be amazing resources to help people in my community, your community, get things done. They, as Adina mentioned, they are typically kind of ancillary, extra financial institutions that work with traditional financial institutions and governmental entities, nonprofit entities to do stuff that they want done. In particular, helping advance affordable housing, helping advance community facilities like a daycare or a health clinic, they women's shelter, et cetera. They help consumers access credit when the traditional markets may not get them there. They also help small businesses and job creators who sometimes have challenges in the traditional financing system. They are an engine that can help things happen. Now, as Adina said, of the 1,100 CDFIs, most places in the country don't really have a CDFI that does this work. It's hard to get a CDFI. They're hard to start. They're hard to grow. They're hard to create the energy that you want. And even if you start one or you have one in your community, it typically may be focused on a particular thing. Like maybe they're really good at charter schools, or maybe they're really good at affordable housing, or maybe they're really good at micro lending. But your community, of course, has a whole range of needs for creative, expanding financing. So as a mayor, I've been in for 5 years. One of the things that I was really interested in was thinking, how do we get a CDFI to Bloomington? We thought about franchising. We thought about, I know how hard it is to start a CDFI. We thought about, can we talk a CDFI into locating in Bloomington? But working with Adina and colleagues, Mark Pinsky and others, we really kind of developed this idea, well, what if we just made it easy for existing CDFIs in our region or nationally to work in Bloomington and kind of attract them in to do that work? And there was grown CDFI friendly Bloomington, which is now about a year and a half old. And CDFI friendly Bloomington is really just kind of what it sounds like. It's an organized effort to make it easy for CDFIs anywhere in the country, particularly in our region, make it easy for them to do work in our community, whether you're whatever kind of CDFI you are, whatever your expertise is. We locally, we brought together from around the country some CDFIs to think about this, people from the industry, local bankers, local economic development folks, local nonprofits to talk about this. It was a process of more than a year of that kind of discussing and exploring and thinking about it. We raised some money to do some startup work. And about a year and a half ago, we opened with one staff person, and he might even be on this call. I don't know, Brian Payne, who's been with us since fall of 2019, and some capital that we assembled from local banks and from city government and government, and basically hung a shingle out and said, CDFIs, please come to Bloomington. We have a lot of deals that you might be interested in. And we can go into all kinds of detail that you might want at the right time. But essentially, Brian and CDFI Friendly Bloomington do a few things. One, they get to know the deals. They get to know what's needed in the community, who's trying to raise money or expand a daycare center, or who's trying to establish a new affordable housing project, or who is, as a business, is trying to grow and having difficulty getting capital. What kind of consumer needs might there be? What kind of governmental programs might there be that could be facilitated by a CDFI? So it's just understanding the market. That's one thing that you get with CDFI friendly approach. A second thing is then getting to know the industry. What CDFIs might be out there interested in working in Bloomington? So that's a marketing effort and a relationship building effort. And as you might imagine, once you have those two things, then the third thing you try to do is matchmake and try to help connect CDFIs to local projects. You do that with shoe leather and conversations and engagement and connections. You also may do it with matching capital. We have a matching capital fund here in Bloomington. But you primarily do that through matchmaking. You're understanding our local market, understanding the CDFI market itself regionally and nationally, and trying to bring them together. And just as a quick example, or let me just tell you kind of what difference that has made. So in the previous 15 years before 2019, in that 15-year period, we had about $5 million of activity by CDFIs into Bloomington. was kind of random. They just kind of found us and got in here and did about $5 million worth of business in 15 years. In the last year and a half, we've had over $16 million of CDFI direct activity in Bloomington, more really double that in terms of project impact, but 16 million. So I'm not a mathematician, but I think that's a roughly a 30x increase, a year and a half with 16 million versus 15 years with 5 million. So we've already seen a major acceleration in CDFIs working in Bloomington. Just give you 3 examples of the kind of projects, a couple of affordable housing, really important ones. One, a 50-unit special needs housing focused on people with mental illness and others that has brought a big chunk with great CDFI expertise that helped create really important affordable housing in our community. A second was a local co-op, had 18 units and was really scrambling to figure out how they're going to keep their 18-unit building with very low cost housing right in downtown Bloomington. And the CDFI stepped in as a partner to let them finance and protect for the very long term that affordability. A third little example is we had an artist, a public art project with an Indiana artist who was asked to do a public art project, but the financing of that was tricky because in public art, you don't get paid till it's done, basically, but he had to purchase a bunch of stuff, and that can be tricky for a very small business. And the CDFI helped us finance a local art project in a public works building. We have about 20 projects in a pipeline that run the gamut from small business, consumer, affordable housing, community projects, et cetera. So I'm going to close with that, just noting that we've seen that dramatic increase with a relatively small investment to help build these relationships, match make between them. This is how small markets like Bloomington, we also are part of a 13-county region. This, to me, is how small markets can pull the expertise of CDFIs from your region and your country into your community in a very efficient way that can really leverage the impact. It's what I think we all need, in my view. CDFI support can be very beneficial. And if you can bring them in your community, it's a really positive thing. So I recommend you take a hard look at this. And I'll shut up and answer questions. And thanks so much. I'll hand it back to go to Gary or Adina, I'm not sure.
Yeah, thanks so much, Mayor Hamilton. So everybody who's on the call, you can feel free to write questions into the chat, and we will take questions after Gary. I see we already have one for Mayor Hamilton, and we'll get to that in a moment. But for now, I'd like to ask Gary Hamilton to say a few words. Gary Cunningham, I'm so sorry. Gary Cunningham to say a few words. He's the president and CEO of Prosperity Now. And similar to Mayor Hamilton, prior to this, he was the CEO of NEDA, the CDFI in Minneapolis, St. Paul. So Gary, tell us what the lessons that you feel CDFIs can bring to cities in America.
Well, I just want to thank the National League of Cities for having me here today. And Adina, thank you for inviting me. And Mayor Hamilton, really a pleasure to be on the panel with you. And I do have to say that I do have another person here. My wife is on this call, which is unusual, but I want to have a shout out to my wife, Betsy Hodges, who's on the call as well. Let me just start by saying that many of us are working on the issue of how do we create economic inclusion within our communities, meaning how do we ensure that people of color are fully integrated into our economic viability of our cities and our places. And one of the things that we need to think about is that, and I'm going to use the term BIPOC, Black, Indigenous, and people of color, but these communities are the fastest growing entrepreneurs in the country. Over a 7-year period study done by the federal government showed that particularly women of color, and Black women in particular, but people of color in general are creating most of the businesses. If you talk about employment, small businesses created about 47% of all new businesses, all new jobs in the country. So this question of really looking at CDFIs in relationship to growing your business's community is really what I'm going to be talking about. So let me give you a feedback underneath that. And for some reason, I have a echo. I'm not sure what that is. So if people could mute, that would be great. So let me give you a few facts under this. It's clear that the regular business banking industry for people of color isn't working very well. And there's a couple studies, one out of the Federal Reserve that just recently happened a year or so ago, that showed that 40% of minority firms don't receive the full amount that they seek in getting loans, where 68% of non-white business owners receive the full amount that they ask for. And in 7A lending and SBA 7A lending, and this is really proxy data, this is the only data across the country that you can actually look at lending and reach any real definitive conclusions. But in the 7A data, the SBA loan program also confirms that Black small business owners receive less credit than their white peers. So we know we have some disparities in the marketplace in terms of lending. In addition, Prosperity Now, which is the organization that I represent, and we just finished a study that was a 10-year look at SBA 504 and 7A lending in Black and Native zip codes. And we found that the lending in those communities by SBA was significantly lower, and that the majority of the SBA dollars was going to white majority zip code. So this just gives you an indication that there's some disparities in the market. It's not making any judgment about why, it's just saying that there is. Thus, the role of CDFIs that Mayor Hamilton so eloquently stated is so critical, because they act as alternative lenders by providing capital at low rates, providing trusted guidance, which is key to successful lending to Black and Brown and Native American businesses. And access to markets, because you can provide the money, but if people don't have actually access to markets to actually expand their businesses, it's all for naught. The biggest issue, as I said, is this issue of the relationship between traditional banks and Black borrowers. And part of the reason the PPP didn't go so well the last time is because many of the Black businesses and the indigenous businesses and the Latino businesses didn't have those banking relationships. And there's data that shows that they have deeper and more profound relationships with CDFIs. And so with CDFIs, city and local leaders don't need to reinvent the wheel. You can take resources that have already been amassed in your community to help really address your economic development strategy. So this could be a key component to your economic development strategies. With CDFIs, you get the cultural competence that comes with working deeply within those communities that help build trust and serve as the backbone to get the housing and economic development created in your communities. And as Adina already mentioned, I actually saw this firsthand when I was the president and CEO of MEDA, and through our lending services and technical assistance program, and including a robust acquisition and merger program, many of our clients were able to increase their revenues and scale their businesses in ways that benefited not just their households, but their larger communities. In fact, I'll just add here, we did a 10-year analysis of the entrepreneurs of color, and we found that on home ownership, the gap was completely closed for entrepreneurs of color and white homeowners of our client base. We also found that their income was higher. And in fact, there's a study that Robert Farley did at the University of Santa Cruz that showed that if you add an entrepreneur to a Black family, that family's assets increased by 600% on average. Another study at the University of Washington Business School showed that over 10-year of data, people of color that were entrepreneurs actually closed the income gap between white families and Black families. So if you're looking for a way, a practical, real way to close the wealth gap in this country, this is the way to do it. So the idea that what we're working on is a strategy to bring CDFI friendly to cities with Black and brown mayors right now. And so we're in discussion with the Black Mayors Association to actually bring this to the fruition. Prosperity Now actually serves as the backbone for 46 African-American-led CDFIs. And so we're trying to bridge these gaps, but you don't have to be an African-American mayor to participate. I want to say that. But we're actually trying to bridge the gap so that we can actually bring more resources in this community, more knowledge and more wherewithal so these businesses to be successful. And so finally, I'll end on this. Prosperity Now and CDFI Friendly America have pledged to create an accelerator by combining Prosperity Now's expertise in cohort-based learning, racial wealth equity, and CDFI practices in communities of color, and other areas where CDFI Friendly America has expertise in the CDFI field in general, including CDFI related training, consulting, and CDFI strategies in particular. Our shared goal is to make a substantial number of Black and brown CDFI-led, CDFI-friendly-led communities so that we see a significant increase in flexible, affordable CDFI finances in these places. So thank you very much for allowing me to speak today, and I'm gonna turn it back to Dina.
Thank you so much, Gary. So there was already a comment in the chat saying, I would be so pleased to have a link to those studies. It would help me to build consensus regarding the need for immediate action. And I would underline that because so many times when we go into these cities, people are unaware of many of the things that you brought out in your studies. They're unaware of the discrimination in lending. They're unaware of the enormous positive impact a loan can make for a whole household, for a whole community. So that would be great if you could provide that. We also had a question about how are new CDFIs funded? So all CDFIs are funded, need two different kinds of money. They need money to operate, and then they need money to lend. So that's like their inventory. So the money to operate comes from all the places you would expect. It comes from foundations, it might come from individual donations, it comes from banks who might give small grants. And the funds to lend, it could come from a government source, it could come from a foundation, it could come from a religious organization and individuals. But banks are the largest funders of CDFIs on the capital side. Banks can meet their Community Reinvestment Act obligations by funding CDFIs. So that's how all CDFIs are funded. Including new ones. There is the CDFI fund as part of the federal government that has funding available both to new and emerging CDFIs and to more established CDFIs. And they are getting a boost in this, in the next round of CARES Act money. Then another question we had was for Mayor Hamilton. And please keep on putting your questions in there. So Mayor Hamilton, can you speak a bit more about the role you think the matching fund you have placed in attracting CDFIs, and what is feeding the matching fund?
Sure, and let me just follow on. I think what you just were talking about, Adina, any community, we have big challenges, whether it's racial equity, economic equality, whether it's the health pandemic and our health infrastructure, whether it's climate change and moving toward more sustainable communities, enormous challenges at every city that I know of. And let me just say, I think CDFIs can be such important partners in moving a community forward in these ways. Gary talked very directly about some of them and the ability of CDFIs to help build a more equitable community. Getting that tool into your community efficiently is really helpful, I think. So in terms of the specific question, and let me just also note the question about starting a CDFI, just to give you some specifics. In a city like Bloomington, we actually came up with $150,000, half public, half private, from the Community Foundation to do a lot of this organizing work for that operating side. We raised $4 million in the loan capital that I'll get to the specific question. That was half public money and half private money, half from the government, different pieces of government, and half from the banking community. And that's a loan fund, so those aren't grants, that's a capital investment. And that $4 million fund, which is basically what CDFI Friendly Bloomington puts on the table. So any CDFI who comes to town and is looking at a deal, we are able to say, look, we can be a pari passu, we can be an equal partner with you in any deal. We have low cost money, and we basically let a CDFI underwrite the deal. If they decide to do the deal, we kind of bootstrap and go along with them on that. Now, not all CDFIs want more money in the deal. If they think it's a good deal, some of the CDFIs are like, hey, we're okay, we're good, we got this, we're gonna lend the whole amount. And we don't really want your money because that just diminishes our balance sheet and our ability to jump in. Others are interested. It's valuable from my perspective locally because it is that tool that tells other CDFIs, we'll put our money where yours is, we'll match it. We were in this, we put skin in the game. It also gets our local banking community and local financial sector as a whole kind of bought into this and learning about it and participating in it. It helps them buy into the projects and to the enterprise. So that's good. They take it seriously that way. They're on our board. But that matching fund, I would say, has been helpful, but much more important has been the matchmaking, the relationship building, the community connections that we have. And the fund, in a way, is kind of both a way to achieve that and a good result from that. But I would say, just because you can't raise a few $1 million in matching money doesn't mean you can't get a CDFI friendly activity going. So I wouldn't let that stop.
Thank you, Mayor Hamilton. So here's another question that somebody raised. How can existing nonprofits work with underrepresented entrepreneurs to identify and partner with CDFIs? Gary, you want to take a chance at that one? That might be similar to what you guys did with me, though.
Yeah, so one of the things that I would start with is, what is your current ecosystem of minority business supports? Because if you don't understand what that is and who's there, then you'll start recreating things that may already exist in your communities. So I would start there with, who are the players in your communities? I think the second thing, because you probably do have players, and a lot of times these are small organizations that are trying to support minority businesses, and because the ecosystem is fragmented, they don't offer businesses support across the life cycle. So if you look at a lot of minority businesses, stay centered in micro business supports, instead of having business supports at each stage of that life cycle so that you can grow those businesses. So the question for each of you is, who do you have in your community, and identifying what that ecosystem looks like. We've done some work where we've looked at some of these ecosystems, and what we found in every case across the country, that they're very fragmented. Entrepreneurs are trying to find out where to go. The city creates a portal, somebody else is creating something else for these businesses, instead of really centralizing that service. And I think I'll end here because I could go on. The other thing is to look at how the funding streams are operating that create the fragmentation in your city. Because unless you can unite those funding streams around a collective impact model, you'll end up with more fragmentation occurring. And cities sit in a great place to actually bring those people, the funders together, to actually think about what you're going to fund and how you're going to fund it to make your ecosystem work better in those communities. And so we've done this work in other places throughout the country, so we can be helpful in that respect.
Thank you, Gary. I know I've seen it.
Sorry, go ahead. I was just going to add something too.
Go ahead, John. I apologize.
Well, just from a customer side, Gary is deep in this and knows this well. But every small business you know, they don't have time. They don't have time to navigate complicated networks, and they're just trying to make their business work. And one of the advantages of CDFI friendly approach is you have a resource whose job it is to connect overworked, underpaid, overstressed small business people with experts in the CDFI world to try to make those connections, and then frankly get out of the way and let the experts who are good at it and the network that Gary described get to it. But sometimes it's just helping stressed business owners and managers connect to places that want to be involved and help. They just can't make that connection well.
Yes, and so many of us have seen how many organizations are there that in your town that will help a business write a business plan? Most likely you don't need another one of those, but maybe you need an organization that can help a business grow from that initial stage to the next stage and grow past the point of working 18 hours a day, 7 days a week, and all those kinds of complexities. Help them get the second stage of finance. All those things are really important. So someone on the chat did me the very sweet favor of saying, well, how do you do this? How do you get started? So I'd like to show you our website and some tools that are on their website that are on our website that might be helpful to you. So here we go. Hopefully this is going to work. What's asking that I open system preferences? Okay, let's answer another question, and in the meantime, I will figure this out. Another question that we had to do with what are typical terms of CDFI deals, and maybe Brian, if you're on the line, maybe you could take that question. Brian Payne, who's our CDFI friendly South Bend person.
Bloomington.
CDFI friendly Bloomington. I'm sorry.
You better not be going to South Bend. I don't want to hear that.
We're not letting them go to South Bend.
Yeah, I'm here. Can everyone hear me?
Yep.
Okay. So, if you're talking about specific deals that feature a partnership with the CDFI friendly entity, in both the cases where CDFI friendly Bloomington has been a co-lender with the CDFI partner, we have, the terms have been very affordable. They've been subprime blended rates. And in these cases, that has been because we've been able to come in at a slightly lower interest rate to achieve the minimum debt coverage ratio and affordability for the borrower and manage risk appetite and the CDFI's minimum standards. That's a small sample size, and I have taken applications for deals where we would be directly in pari passu and the terms would be exactly the same. But I think as we keep doing this longer than 12 months, we're going to learn which deals CDFIs are more interested in.
Thank you so much. So I think the answer to the question is that CDFIs can make loans that banks cannot. The terms are usually similar, perhaps longer term, sometimes lower rate, but that's not really the issue. Lower rate is not the issue so much as access to fair capital. We're going to ask Bria, my business administrator, Wonder Woman, to please share the website because I can't figure out how to do it. So hopefully we can do that. So this is cdfifriendlyamerica.com. And if you're wondering about my email address, it's adina@cdfifriendlyamerica.com. And we put some tools up for cities specifically to navigate through to CDFI friendly land. Specifically, we have 3 suggestions for you. So you can go to the 4 cities. You could click on 4 cities, Bria. Here we go, 3 steps. Here we have 3 steps that we're going to suggest. And the first is find out if there's a CDFI located in your community. And you can do that by clicking on our CDFI Finder, which has a map. And you can go to your state and find out if there's a CDFI in your state. So for some reason, we're needing to refresh today. We don't know why. Yesterday it worked perfectly, but you know how that is. That's technology. So if you don't mind clicking on Missouri, So this is the whole country, and each state has how many CDFIs are headquartered in it. And Missouri, right in the middle of the country, has 26. And if you click on Missouri, it will pick up a list below, hopefully. And that will tell you whether there's a CDFI that is headquartered in your city. But even if it's not headquartered in your city, it might work in your city. And you have to kind of call around and look at their websites and ask around to see, do they do the kind of lending that you wanted, that you need? Like maybe you're looking for lending for small businesses and this one only does housing. Or maybe you're looking for mortgage lending and this one only does business. So it'll take a little exploration. But this is one thing you can do. So click on your state and look for where a CDFI might be located that could help you and start a relationship with that CDFI. CDFIs are anxious to find referral partners. That's where they get many of their deals. And then after that, we encourage you to take the CDFI friendly self-assessment, which is also on our website. And it just asks you a very few questions about what are the issues in your community. Are you a city, a town, a county, or multiple counties? What are the significant barriers that you're facing? What sources of financing are you looking for? Affordable capital are you looking for? And who have you worked with? And then we want to know, have you successfully done a public-private partnership in your area? Because CDFI Friendly is essentially a successful public-private partnership. And then just let us know who you are, and we will follow up with you. If you fill this out, we'll send you our proprietary data sheet that we've created that draws on federally available data to assess whether or not CDFI Friendly is a good idea for you. And one of the statistics that's in that sheet is for your city, what's the per capita average of CDFI investment in your city that I talked about before, where it's, while it's 180 some odd dollars in the country, in the city of Goshen, it was only 8, so we can help you with that. And then if you like those interactions, then we encourage you to go to the full approach, which is get an independent professional CDFI friendly assessment done by CDFI Friendly America. That's us, myself, and Mark Pinsky, and a few others. And you can write to us at info@CDFI Friendly America to start that conversation. Or if you fill out the assessment, we'll be calling you to see if that's something you'd be interested in. And that's how you get started. So let's see, I think there's a few new questions. Thank you, Bria. We can go back to unsharing. So there's a question, there is a new CDFI announced yesterday in Fresno, California at the Fresno Area Hispanic Foundation. It belongs on the map. Well, it will be on the map once it becomes CDFI certified by the CDFI fund and they put it on their list, then it'll be on our map. There's another question. Okay, this is a good one. What is the focus of the Prosperity Now and CDFI Friendly America joint accelerator mentioned earlier? Was it for cities looking to do something similar to Bloomington? Gary, you want to take the first answer at that?
I sure can. We are in the stages of building this accelerator now. The whole idea is to combine our joint strengths. Prosperity Now has done a lot of work on analysis of racial economic inclusion by city. So if you go to prosperitynow.org, any of you can go to our scorecard and actually bring down data immediately on racial indications in your city and places. So it's prosperitynow.org, and it's really easy to use. It's a great tool. But part of what we're doing with CDFI Friendly America is building out the framework so that we can actually do some of the things that I talked about in each of the cities. One is, what is the ecosystem in your city? How does it work? What is the lending going on in your city and how does it work? Are you really meeting those entrepreneurs of color on the ground? And then developing the tools by which we can bring resources from other places if necessary to actually strengthen the capital stack for CDFI level lending in your community. And so we're working both on the, particularly on the business side on this for this accelerator, but our hope is that we can expand both in the business and housing side so that we can actually be full service in terms of these issues. And so CDFI Friendly America, and I want to speak to them, bring a high degree of knowledge about how lending capital works and how you can actually take that the idea of building capital in your community, and then they are actually the spear, the tip of the spear, if you will, and then we will actually be doing a lot of work with them on building out a CDFI friendly in those cities that want that to happen in. So that's really what we're doing now as a part of this effort. And I can tell you right now that we have a lot of folks are asking how they can participate in this. So if you're interested, I would ask you to actually sign up today because this thing is taking off, and it's going to be really big with regards to getting access to capital in those communities.
Thank you, Gary. As Gary said, we are right now involved in building this accelerator. It's not operating right now, but we hope it will be. In 2021, we're hoping that there will be the initial group of cities that can go through it. Okay, here's another question. Alaska has a strong network of CDFIs, specifically native CDFIs, and provide a myriad of resources. I have a $500,000 fund for BIPOC-owned businesses and would love to partner with them to deploy that capital. Any suggestions on navigating a subsidiary that is mutually beneficial for a partner fund, entrepreneurs, and the CDFIs? So my first suggestion would be to consider just investing directly in the CDFIs that are doing the kind of work you're interested in. Instead of making it more complicated, just CDFIs accept investments, and you could either do it as a grant or you could do it as a loan and get repaid. That's up to you. So I would open up conversations with the CDFIs in your community that are doing the kind of work you're interested in and see if you can't invest directly in them before you create an additional institution. Believe it or not, $500,000 is not that much money, and it's better for it to be joined up with other monies, and it's much more efficient and effective that way. Okay, more questions are coming in. So when you say sign up today, what do you mean? Please fill out the form on our website, cdfifriendlyamerica.com. Go to 4 cities and fill out that form expressing your interest. To get on the mailing list, you can also just write to info@cdfifriendlyamerica.com and we will keep you posted on our progress. We send out MailChimp messages of less than twice a month, so it's not too bothersome. What other questions do people have? Have I missed any of the questions? Let's see. Oh, here we go. We are working on a system in Wilmington, Delaware. We have mapped the ecosystem and could utilize help around the funding stream unification and any resources that would be valuable. We are creating a collective impact ecosystem through an alliance. So that is, Gary, if there's any resources you could put in the chat, I'm sure that would be most appreciated.
Well, I did send a private chat back.
Right.
Prosperity Now actually has a project on the racial wealth divide in Wilmington that we're working with a number of nonprofit organizations to actually increase their capacity. We've been doing that for the last 2 years. So we have some deep roots in Wilmington, and I'd be glad to help you think about how you could really map out your ecosystem on the CDFI side. We haven't been working, I think we're working with 1 or 2 there, but we'd be delighted to work with you because it's already work we're doing already.
Great. So we have the prosperitynow.org is in there, and Gary's email address is in the chat, and I'm going to send mine. I'm wondering if Mayor Hamilton and Gary Cunningham, if you have some last thoughts, and that's perhaps how we could end our time together, because I know we want to leave 5 minutes at the end for Phil to close us out. So Mayor Hamilton, if you would want to go first.
Okay, well, thank you very much. Look, you're all from communities in different places. We have really big challenges in front of us, every community. And some of the topics we've talked about, I won't repeat those, but you know the big challenges that we face over the next 5, 10 years more. There is this industry out there of CDFIs who are a group of mission-oriented organizations, and they actually want to expand and work in more places. And in my view, it's a really smart thing for communities to explore how you pull that industry into your community. They have great people. They have aligned typically with public goals and community efforts, and they bring expertise and capital. For a low six-figure operating investment, our community has pulled in $16 million of CDFI money, a total of $30 million of project money, helping address needs. And I feel like we're kind of just getting started. So this hungry industry out there that wants to expand and that we want as a country to expand their impact, it's a real opportunity for communities, collections of communities, places, even if you have a CDFI. But many of us don't. It's a huge opportunity to connect with these groups, many of which came out of the civil rights organizations and economic equality focus, and they're fantastic resources, and connecting them can be very valuable to your community. So I encourage you to think hard about this. I'm happy to talk if anybody wants any more detail about it. And I really appreciate the National League of Cities convening this and putting us all together with Gary and Prosperity and Adina and Mark with CDFI Friendly America. Thanks so much.
Thank you, Mayor Hamilton.
Yeah, and I'll just say, one, thank you to the National League of Cities and Phil and his staff for putting this together. Adina and Mark Pensky, thank you. I know Mark hasn't said much on the line, but he is certainly a brainchild, or one of the brainchilds behind CDFI Friendly America. And I want to say, I know all of you that are working in cities are grappling with very deep issues, and that there's multiple stakeholders and people coming at you. One of the things that we can say is that by connecting with us, you might be able to create a new funnel of resources for on the housing side, as well as the affordable housing, I should say, side, as well as the business side, which is critical for the development of your communities. And so if we at Prosperity Now and can be any additional assistance to you, I put my information in the chat. Feel free to just send me an email. I will send you all of the reports that I cited. If you send me an email, I will get those to you because they are very powerful. And I just like to say, at the end of the day, we're all in this together. And we all need to make our communities work together. So I am so privileged and pleased to be able to work with CDFI Friendly America on this effort. So thank you.
Thank you so much, Gary. And I'd also like to give out my thanks to the National League of Cities. And please feel free to email me, Adina at CDFIFriendlyAmerica.com, or fill out the form on our website. And we would be interested in understanding more about your community and how this strategy might fit with what you're trying to accomplish. Thank you very much. Back to you, Phil.
Great, thanks, Adina. I don't have a whole lot to add. I just want to make sure that we thank everyone who's spoken on the call: Adina, Mayor Hamilton, Gary, Bria on running the back end, as well as Mark Pinsky, who's been essential in organizing this partnership. I hope that we stay connected. Thank you to all of our cities who have joined the call. You heard it here. As a next step, definitely feel free to reach out to the CDFI Friendly America team. Those links are in the chat. We'll also send out those links in a follow-up email. Besides that, I'm going to give you these 5 minutes back. I hope you use them to use the self-assessment tool that was included in the chat box that is CDFI Friendly made for you all. And as always, reach out if you have any questions about anything, but specifically the commitments that many of you have made to inclusive economic development this year through our program. With that, I wish you all a great afternoon, and thanks again for joining.